What's going on, guys? Let's not waste any time. I got Google on the screen right now, and this is the first stock in my list of stocks that I am literally all in right now. I believe these are smart investments. I'm going to be listing the reasons why I think these stocks are going to be up. The third stock on this list recently had a pretty big dip, and it is one of the best buying opportunities. But let's start off with the first one, Google. So Alphabet, Google, their search dominance, their data moat, their AI integration could actually take the stock to the next level beyond $4 trillion. Now, they're currently sitting at $3.39 trillion, so that's about $600 billion in market cap that I believe this stock could fill in terms of a gap. In the last 1 month, the stock is up over 15%, which is a very good and mighty rise for a big Mag 7 stock. But I still think this stock is undervalued. Now, the first reason is because they have an amazing distribution moat. Google Chrome is about 70% of all web browsing. Android, it powers about 75% of global smartphones. And Google still has a really good Apple deal. They remain the default on Safari, covering nearly all remaining users. So what they have is basically a behavioral lock-in. Billions stay within Google's ecosystem simply because of habit. And that's why I think this stock is easily going to be $330 per share in probably the next 6 months, which makes it a really good retirement play for those that don't want a lot of volatility and want upside growth. Now check it out, Google has actually gone past the top of the Bollinger Band, and we have had a huge expansion. That's a lot to do with the earnings that they recently had that have come in very positively. You can see the moving average is basically a straight trajectory line upwards, and Google stock is continuing to rise, which is going to continue to bring the moving average higher. A big reason for this is really their AI integration into search. Whenever you search something right now, they have AI. For example, I just typed in calories in salmon. So they have an AI overview, and now they'll show you like calorie content of salmon varies depending on the type, preparation method, and serving size. And there you go, you get a quick answer similar to ChatGPT or other LLMs. Statistically, the valuation is very good for Google with a trailing PE ratio of just 26 and a forward PE ratio of 23. Because of AI integration, now I think the threat of competition is not going to be a big deal for Google. AI overviews is actually 2 billion plus users monthly. AI mode, which is a seamless switch between classic and conversational search, is also becoming very powerful. So this leads to higher engagement and higher ad revenue growth, and it's not cannibalizing any of Google's profits. Their ecosystem and cross-selling power is also really strong between Google Cloud, ads and devices, as well as YouTube. YouTube is the second largest search engine and has massive ad reach. Google, of course, has a huge data advantage because billions of daily queries come into Google, and they have the best real-world data to train AI models. So I'm looking at this company as a very good and strong long-term investment. The next stock that I want to talk about is going to be Meta. Meta had some pretty bad performance, and it ended up crashing, completely taking an elevator down, completely plummeting. It's as if the elevator lost control and it just went from the floor 15 down to floor 0 in like a matter of seconds. And this has been pretty painful for a lot of Meta investors. The stock went from $750 to $650. It lost a whole $100. Mr. Mark Zuckerberg is also feeling the pain, to be honest with you. But a lot of this is honestly due to a one-time tax charge of about $16 billion. And yes, when I looked at the analysis of the call that they had in the data, well, costs grew faster than revenue in this specific quarter. For example, cloud, data center, AI infrastructure costs did go up, which made the margin picture look less appealing. And that did readjust Wall Street's expectations for future margin expansion. However, now that the tough news has kind of come out, a lot of investors have probably noticed a lot of investors that have sold out of this company have done so by mistake, in my opinion. I'm not a financial advisor or a tax advisor. I'm just a guy on the internet. But in my opinion and my research, I truly believe that now is a fantastic entry point into Meta. It's actually a massive discount. It's trading for way less in terms of price to earnings than the other Mag 7 stocks. The market cap is sitting at 1.6 trillion and the PE ratio is 28. However, the growth is still very real, and just because they had less margins doesn't really mean that the future looks worse for Meta. Most investors still see Meta as a social media company. Facebook, Instagram, WhatsApp, but that version of Meta has died in 2021. What's emerging now is an AI infrastructure powerhouse disguised as a social media network. The real comeback right now is absolutely crazy. So many people were counting Meta out, but is the comeback king of AI infrastructure. Mark Zuckerberg's pivot may go down as one of the greatest corporate turnarounds of the decade. I truly believe MBAs and all these masters in business and finance are going to be studying exactly how Meta made a huge turnaround in investment. In fact, Mark Zuckerberg has openly said that he's willing to risk misspending a couple of hundred of billions of dollars to stay ahead in the AI arms race. Because the real risk, in his words, is higher on the other side of not investing. That kind of conviction separates generational founders from professional managers. While Apple plays it safe and Google is optimizing, and I love Google, Meta is actually taking risk. And that's why I think in the next 5 years, this stock is going to be completely good. Like if it doubles and it goes up another 100% in 5 years, that's cool. That will still beat the S&P 500. My main goal is to create income using options and to grow my wealth steadily. Meta provides that opportunity. Before we move on to SoFi, which also has a great ecosystem, I want to mention Meta's ecosystem. Meta's strength isn't just in building data centers, it's in using AI to reinvest into core platforms. Instagram plus Reels, that is a personalized AI feed and has basically made so many addicted users and is driving record engagement. Unfortunately, social media, super addictive. And Instagram and Reels is very, very strong. Facebook has aging demographics, which has stabilized by AI-driven recommendations, but the aging demographics have a lot of money to spend, and Facebook can feed lots of high-value ads to the aging demographics. WhatsApp Business, the monetization ramp with integrated AI assistants and ad targeting is looking pretty good as well. And then Llama 3 and beyond, so that is also a category where Meta has a nice ecosystem going on. They still generated over $20 billion in free cash flow per quarter, so this is an absolute winning play, in my opinion, to be invested in. The next stock is going to be SoFi. Now, SoFi is a stock that I have loved for a very long time. I've been in this company since the market cap was literally at around 10 billion and even less than that. The company has had a 12% return in the past 1 month, and they have the best ecosystem ever. They get you in, and once you're in, man, they got you in like on handcuffs, okay? You're in handcuffs, and then you're begging for some water at the police station, and they lock you up, and then that's it. Like, you're there. You're there for life, right? That's SoFi. SoFi is, in my opinion, a company that has figured out the game of acquiring customers and then keeping those customers, retaining them, and squeezing out all the juice that they can. So if it's squeezing a lemon, it is squeezing that lemon like to the 100%. Literally, there's not a drop left. And you can see based on the chart, it has been on a very strong momentum drive. This company is on a huge momentum ride, and I believe that this is honestly still the beginning for this company. I can see this being a $100 billion company. And I don't really think that's an if, it's really just a when. When will they continue to monetize, drive revenue, make more cash that goes into their balance sheet, and then the company is going to be worth that amount. You can see here on my screen, I have a position on SoFi. I have about $91,000. It makes up just under 2% of my portfolio here, but I do invest a little bit more into SoFi on this side as well in my retirement account. And I believe that this is a good investment to have for the long term. And I always like long-term investments. I'm never looking to do short-term swings. I'm not looking for fancy stuff. I'm looking to generate income and build wealth into retirement. So I am up 35% on SoFi, and I think that this stock is going to be about a $50 stock in the near, not too far future, potentially in 2026. All right, let's move over into Palantir. Palantir is a stock that I bought at IPO. Literally when they IPO'd, I told my community, I said, guys, I am buying Palantir. The next stock that I want to cover is going to be Palantir. They are going to be reporting earnings on November 3rd, which is going to be essentially today as this video gets released. And I am very excited because at 5 p.m. Eastern, we are going to get some results for Palantir. Over the past 1 month, the stock is up about 10%. And I will say that this stock is not a cheap stock. I will repeat that. This is not a cheap stock. Based on statistics alone, this is a very pricey stock. However, it is pricey for a good reason. And let me explain to you, PE ratio, although very important, is not very accurate, especially when it comes to a stock that has recently become profitable. The reason is because earnings can increase very quickly. So for example, if a company reports $1 million in earnings and they're early on in their monetization, well, that's $1 million. But next year, if they cut expenses, if they grow revenue, those earnings can go from 1 million to 10 million. That is not unheard of. That is very much possible. And that's what every single hyperscaler has actually done. That has happened to Amazon. That has happened to Tesla. If you recall, if you've been investing for a while, Tesla actually had a PE ratio in the thousands. So Palantir has a very high PE ratio, which means that yes, it's not cheap based on PE ratio, but you can already see that a Ford PE ratio is going to drop down to 200. So I'm pretty bullish on Palantir, although I would not hold a lot of shares of Palantir right now. I already have a position in it. In fact, let me show you my position on Palantir real quick and what I am holding. So I am holding about $500,000 worth of Palantir, and that is basically the gain that I have on my shares. Now, I've been selling covered calls on Palantir, and that is a strategy that I do use for generating income, and oftentimes I do have to roll because as Palantir increases so freaking fast, oftentimes you have to roll higher and higher and higher, and that's completely okay because my return on Palantir has far exceeded the S&P 500. Now, last stock that I want to talk about is going to be Chipotle. Chipotle has been disappointing, okay? I like restaurant stocks as a long-term play, and overall I have about 1% of my money in restaurant stocks. So that is something like a Sweetgreens, a Cava, and a Chipotle, and I have recently just decided to only hold Chipotle. Now, Chipotle has been very disappointing to say the least. Chipotle has been in a very tough spot, and the revenue that they have is about $3.1 billion, which was slightly below analyst expectations, and it's only up about 4.5% year over year. Let me explain to you why I still think Chipotle is a good investment, and it deserves some money. For me, it's about 1%. Not a huge position, but what I think is interesting is it's a good diversification bet. I do think that Chipotle is going to have a massive untapped runway when it comes to the amount of stores that they're going to open up. Let me tell you, Chipotle currently has about 3,800 stores. Management's goal is 7,000 stores globally. Okay, they are taking out the expansion play. They're going for international expansion, which is Canada, Europe, Kuwait, and soon it's going to be South Korea and Mexico. Now, Mexico, man, I don't know. They're either crazy or they're geniuses because obviously it's Mexican food. And if it can crack Mexico, oh man, I'm telling you, they are going to make so much dough. It's going to look like a pizza company, if that makes sense, okay? Maybe that joke wasn't too good, but they're going to make a lot of dough. They are going to print money. And the chances of that, who knows? It's hard to predict. Maybe it's a 30% chance. But if that happens, the stock is going to basically go to the moon. But it doesn't have to crack Mexico code to do very well because as they expand, their revenue is going to go up. And even if their profits don't go up that much, even if their same-store sales don't increase at all, then the company's just going to be worth more because there's just way more locations. After the E. coli crisis many, many years ago, I was still in college, Chipotle rebuilt itself with tighter operations, cleaner sourcing, and better training, which has been very important in terms of scaling and basically creating a duplicatable process for just opening up another store. Very similar to what McDonald's does. And I'm just betting that Chipotle will basically become very similar to McDonald's and just be a globally recognized brand. That's very possible. Chipotle, Mexican food, is very simple, has an easy supply chain, and I think that they can scale to 7,000 stores as they are planning to. The new CEO, Scott Boatwright, is doubling down on consistency and automation. So that means robotic prep, AI-driven scheduling, and those things are going to increase margins, increase efficiency, and over 5 years, these efficiency improvements will reduce food and labor costs, and it's going to rebuild the margin leverage. So when they have a lot of stores, they're going to pump out a lot of cash flow. So if Chipotle turns into the next McDonald's, which basically it's going to happen, and then McDonald's is going to be even bigger, right, in the future as everything kind of continues to grow and compound. Well, Chipotle is going to basically be the next McDonald's in terms of store amount at some point eventually, and they're going to be risking basically trading fresh food ideals for mass production efficiency. And honestly, that's going to make them a lot of money, but it's going to be losing the soul that made it special. And that's kind of sad. I don't like huge corporations that just systematize, but it makes money. What started as a mission for quality could very much develop into just corporate greed and a huge, massive company, which is a good thing for investors. I am not, yes, I'm saying it kind of in a negative way. I wanted to make this content a little bit interesting today by saying something unique and different. But when you systematize something from a business perspective, it works. From a special perspective, kind of sucks, because Chipotle, when it had less stores, it was more special. But when it's massive, when it's everywhere, they're gonna make more money. So from the money angle, yes, I think they're gonna be doing very well. And they're gonna do well because they're just gonna copy McDonald's. They're going to copy McDonald's. Maybe their ingredients are going to go down even more. They're going to cut costs. And that's pretty much the playbook of every single massive restaurant chain. So from an investment standpoint, I think it's a smart one. If you appreciate my analysis and looking into companies, I do a lot more of this on my Monday and Wednesday coaching calls. I look at exact investments that I am making, entry points, exit points, Bollinger Band and technical analysis, as well as fundamental analysis. This is a lot what I do in my coaching program. And if you want to grow your wealth and you want to become someone that understands option trading, then go ahead and click the first link in the description for more details on my coaching program. I am going to be scaling portfolios and showing you how to build a portfolio step by step. You don't have to have a massive portfolio. I show anyone how to build that foundation of knowledge and become consistent with option trading. I hope that you enjoyed my list of stocks, and I'll catch you in the next one.